Stock I'm tracking today is Tesla, off a new note from Piper Sandler saying investors should be proactively buying at this point. Analyst Alexander Potter published a note on Wednesday highlighting the recent Tesla vehicle price cuts and the stock's downturn over the last several months as catalysts for the next leg upward for Tesla shares.
In this video, an analyst says investors should be loading up on Tesla stock at these levels, a quick overview of Elon Musk's trial regarding the 2018 funding secured tweet, plus some surprisingly great analysis in the mainstream media regarding Tesla's biggest weapon in the EV war, insane profitability and epic pricing power. And just a quick heads up, in today's exclusive Patreon video, I detail a stunning offer that was made to an independent content creator. $50 million for a full-time job over the next 4 years. This is seriously big business. So check it out. If you're not a member, you can join Patreon with the card in the corner or the link in the pinned comment.
Stock I'm tracking today is Tesla, off a new note from Piper Sandler saying investors should be proactively buying at this point.
In the interest of full disclosure, this investor is most certainly actively buying with every spare cent.
Analyst Alexander Potter published a note on Wednesday highlighting the recent Tesla vehicle price cuts and the stock's downturn over the last several months as catalysts for the next leg upward for Tesla shares. Piper Sandler points out that including the $7,500 federal tax credit, Tesla's Model Ys are now far more affordable. Now, a graph in the note showed Model Ys had been more expensive than large SUVs like a Chevrolet Suburban or GMC Yukon and are now back in the price range of mid-size SUVs like a Ford Explorer and even cheaper than a Jeep Grand Cherokee. Piper argues the price cuts could boost U.S. demand by 300 to 600,000 vehicles. Dave, that graph really did stick out to me, though, when you talk about the fact that a Tesla Model Y was more expensive than those major large vehicles that fit 8 people, but now getting back to earth, I think, a little bit, and maybe being more competitive with some other stocks in the or some other cars in the market.
Yeah, look, you had to be nervous initially about the margins and how much they would shrink with this dramatic $13,000 price cut, but it just, to your point, broadens the customer base so much and almost erases a little bit of that Twitter hangover. If he would just shut up. I mean, that is the one problem. He can't get out of his own way in terms of turning off customers. We talked about how Elon's favorability has been cut in half over the last year since he's been speaking out so politically. But yes, this opens up a whole new customer base. Ross Gerber, albeit a massive Tesla bull, said the bullish case for Tesla is now stronger than ever. And he was very critical of the Twitter situation as well.
It is true that Ross Gerber has been extremely critical of Elon Musk, Tesla, and the Twitter deal in the last little while. I have no idea why, though.
So let's talk a little bit about the GK fund. We ended last year. We were down about 42%. It was a pathetic performance, honestly. I'm sorry.
If it's any consolation, my own fund, a client of one, just myself, managed to turn over $1 million into around $500,000 last year. So similar performance to the GK fund. Ross, don't feel too bad about it. And now back to Piper Sandler, who currently have a $300 price target on Tesla stock, representing some enormous upside from where we are today, a little over $100 per share. Piper Sandler lowering their price target on Tesla stock to $300 per share, previously $340, while maintaining an overweight rating. Here are some comments. Quote, "We are updating our model in preparation for earnings on January 25th. Tesla took longer than expected to cut prices, but now that pricing adjustments have been made, and now that the valuation has reset, we think investors should be proactively buying Tesla stock." I'm 420 steps ahead of you, Piper Sandler. 3 points warrant particular attention in our opinion. First, we think Tesla can easily achieve 50+% delivery growth in 2023 in the US alone. Price cuts and a $7,500 tax credit could boost demand by 300 to 600,000 units. Second, while we are cutting our gross margin forecast to reflect lower pricing, we wouldn't be shocked if margins surprise to the upside in 2023. And finally, we think the self-driving software business is free at this valuation. This is a fair point, and it's worth discussing. If Tesla does successfully achieve autonomy, and if, as I believe, they're not only in a lead, but an unassailable lead, and if, as I believe, this is a winner-takes-most market, Tesla is literally sitting on top of a multi-trillion-dollar opportunity this decade, and the stock market is valuing it at approximately $0 per share. Within every share of Tesla stock purchased today is a never-expiring call option on autonomy. Something to consider. And now a short summary of Elon Musk's trial regarding the 2018 funding secured tweet, and then some stunning analysis of Tesla's epic advantage in the EV war.
Elon Musk is expected to testify in a federal trial that deals with tweets he sent in 2018 regarding the possibility of taking Tesla private. Elon Musk tweeted, "I'm considering taking Tesla private at 420 funding secured. He later followed up saying investor support is confirmed. Only reason why this is not certain is that it's contingent on a shareholder vote. Tesla's stock price closed up about 11% the day that Mr. Musk sent those tweets, and it later gave back those gains and fell further.
Thank you all for coming tonight.
The deal, which would have been valued at around $72 billion, never materialized.
And thank fuck it didn't materialize. Tesla's stock up about 6x since that deal would have closed. And had the company gone private, none of us would have been able to participate in that growth.
The plaintiff has alleged that Mr. Musk's tweets were false, material to investors who relied upon them to make trading decisions, and that this class of investors lost billions of dollars as a result. Attorneys presented opening statements on January 18th in the case. An attorney for the defendants, who include Mr. Musk, Tesla, and members of the board at the time, described the tweets as shorthand made in the heat of the moment that didn't differ materially from the situation at hand, even though in some cases they may have been technically inaccurate. The plaintiff is seeking damages for investor losses that Musk's tweets allegedly caused. The plaintiff said in a trial brief, as a result of the turmoil in the prices for Tesla's stock, options, and bonds caused by Musk and Tesla's statements, investors lost billions of dollars from August 7th, 2018 to August 17th, 2018.
Way to take ownership and full responsibility of your own gambling losses. Yep, I made a bet on the stocks casino, I lost some money, let's sue somebody. Pathetic. This is like suing McDonald's because you're a fat motherfucker. You're the one that's putting the food in your mouth. Nobody's forcing you. It's your fault you're fat. And it's your fault if you lose money in the stock market. There is little I despise more than a professional victim. Always looking for an excuse. A scapegoat. Somebody to blame. Pathetic.
The judge in this case has already ruled that certain of Musk's statements were untrue. That means that the key questions left for the jury include whether those statements were material to investors and whether Musk knew that they were untrue. Musk is expected to testify as soon as January 20th. The witness lists indicate that we may get to hear from Tesla executives and current and former board members about what was going on inside the company at this incredibly interesting, chaotic time at Tesla. The trial is expected to run for about 3 weeks through the beginning of February before being turned over to the jury to decide the verdict.
I cannot believe that this is sucking up valuable resources in the US legal system. A bunch of stocks gamblers trying to sue Elon Musk because they lost money betting, gambling on Tesla stock. Surely this judge has better things to be doing. Surely these members of the jury could be put to better use. Absolutely farcical. And now from a farce to something that was surprisingly awesome. The mainstream media outlet saying things about Tesla that make sense. Well, wonders never cease. We are over on Reuters. Analysis. Tesla uses its profits as a weapon in an EV price war. Tesla earns more money for every vehicle it sells than any of its global rivals. Now, Techno King, formerly the chief executive, Elon Musk, is using that superior profitability as a weapon in the EV price war he started. Tesla, once one of the auto industry's biggest money losers, has over the past year built a commanding lead over most major rivals in profit per vehicle, a Reuters analysis of industry data shows. Now, I just gotta say, it's impressive that this is appearing in the mainstream media. It won't surprise anybody watching this channel. But outside of the Tesla bubble, there are still people who think Tesla doesn't make any money, they're not profitable, they're reliant upon EV credits, the competition's coming, on and on and on. Tesla earned $15,653 in gross profit per vehicle in the third quarter of 2022. More than twice as much as Volkswagen, 4 times the comparable figure for Toyota Motor Corporation, and 5 times more than Ford, according to Reuters analysis. For most of this year, Tesla joined rivals in aggressively raising prices on most popular vehicles, such as the Model Y SUV. Ooh, can somebody report Reuters for misinformation? According to the IRS, the Model Y isn't an SUV, hence the price cut off for the EV tax credit. You know, the corrupt one that's really a low-key bailout to General Motors and... Oh wait, did I say that out loud? Nah. Moving on. Shortages of semiconductors and other materials kept auto industry production down. allowing companies across the industry to focus on higher margin models and book strong profits, even as sales volumes fell. And now, Tesla's commanding lead. Production cost advantage leads to price cuts. We're looking at profit per vehicle with a bunch of automakers. By the way, in case anyone hasn't already picked it up, there's definitely a typo or an error on this graph. The title here, gross profit per vehicle, should be net profit, and the one below should be gross profit. Easy mistake to make. Along the bottom here, left to right, you got vehicles with negative margins of up to $20,000 loss per vehicle. Shout out to NIO. The grey figure is Q4 2020. The blue, Q3 2022, almost 2 full years. So what you would want to see, as we do with Tesla along the top here, is an increase in this number over time. Back in Q4 2020, Tesla was making just under $1,500 per vehicle sold. In Q3 2022, close to $10,000. Government Motors, who led, and it matters, according to the very not corrupt president of the United States, who isn't in the pocket of the United Auto Workers Union, General Motors, a very serious threat to Tesla, has massively increased the profit per vehicle in their lineup from a whopping $1,344 in Q4 2020 to a massive $2,150 in Q3 2022. You did it, Mary, you led. BYD, one of Tesla's biggest threats, according to many experts, has massively increased their profit per vehicle too, from $1,550 in 2020 to $1,575 in 2022. Good job, BYD. Toyota, who still aren't sure whether or not consumers even want electric vehicles, have increased their profit per vehicle in Q4 2020 from $1,197 to a whopping $2,823. You guys can see the rest of these. Tesla literally out in a league of their own. And it's not just the actual numerical profitability per vehicle, which is stunning, but it's the increase in profitability per vehicle over time. Now, why has this happened? Predominantly because Tesla has driven their costs down and increased their scale. Guess what? Tesla's going to keep increasing their scale and driving their costs down even more throughout the decade. So do the math. If we go to the incorrectly labeled net profit per vehicle, which is actually gross profit per vehicle, tells a very similar story. Tesla's still out in a league of their own, although it looks suspiciously like BYD is not too far off Tesla, but there's just one issue. Things are trending in the wrong direction for BYD. Their gross profit per vehicle has actually collapsed from $14,921 to $5,456. In short, BYD clearly trending in the wrong direction, Tesla clearly trending in the right direction. If you guys want to pause and nerd it out, feel free. It's really worth letting this sink in. As I mentioned, up the top here, net profit per vehicle, again with the incorrect title of gross profit per vehicle, there's literally no competition, okay? Tesla's making a stupid amount of money per vehicle sold. It's just absurd. We can see again, NIO's loss per vehicle is actually increasing over time. The same for Xpeng. And once again, I must stress, compared to most of these other companies, the exceptions being Xpeng, NIO, Tesla is making far fewer vehicles per year. They have much less scale. They're benefiting less from economies of scale, yet they're still printing a shit ton of money per vehicle versus these other companies who are barely making any profit at all, razor-thin margins. As Tesla continues to innovate in terms of manufacturing techniques, to scale up their production globally, their cost to produce vehicles will fall even further. This adds to their already insane pricing power and profitability. And just you wait until they've solved autonomy, and the software component becomes a much larger slice of the pie. Next time you hear somebody out themselves as a moron by saying Tesla's just a car company, why don't you send them this and say, really? If Tesla's just a car company, why are they making 3 or 4 times more money per vehicle sold than actual car companies? Back to the article. Tesla's decision to reverse course and spend its production cost advantage on price cuts now challenges the profit over volume strategies established automakers such as GM have pursued since the 2008 financial crisis, which caused them to go bankrupt before being bailed out by the government, hence Government Motors, and doubled down on during the plague. To control production costs, Tesla has invested heavily in new manufacturing technology, such as the use of large castings to replace small metal parts. Shout out to Gigapress. Any automotive manufacturer could have implemented, but they didn't. This could have been done decades ago, but nobody did it. Why? Complacency, the comfort zone. Don't want to rock the boat. Tesla brought battery manufacturing and other parts of its supply chain in-house and standardized vehicle designs to improve economies of scale. Again, things that other companies could have done, but they didn't. It does make you wonder why. Using production cost advantages to fund price cuts has a long history in the auto industry. Henry Ford slashed prices on his Model T in the early 20th century as his innovative mass production system revved up. During the 1980s and 1990s, Toyota used the cost lead provided by its lean production system to offer features at prices Detroit automakers struggled to match. Now, Toyota is rebooting, in vain I might add, its strategy under pressure from Tesla. Growth in electric vehicle demand outpaced the overall market in the United States and globally during 2020. What a surprise. That emboldened automakers to push EV prices higher. Ford hiked prices for its electric F-150 pickup by 40% during 2020. Rising capacity. But analysts are warning the global EV market could soon have more production capacity than demand. By 2026, North American EV demand will hit a level of about 2... Oh, shit. These fucking experts with their forecasts. Oh god, dude. By 2026, North American EV demand will hit a level of about 2.8 million vehicles a year, said industry forecaster Warren Brown. But North American EV factories will be capable of assembling more than 4.5 million vehicles, putting overall capacity utilization at just under... You fucking dumb. Oh, what a fucking idiot. I just gotta move on. Fucking hell, dude. In China, the end of central government subsidies is accelerating a market share war among rivals in the world's largest EV market. Quote, Tesla has taken the nuclear option to bully the weaker, thin-margin players off the table in China, said Bill Russo of Automobility, an industry consultancy in Shanghai. Quote, big pie, fewer slices, more to eat for those that remain. Startups, such as China's XPeng, had benefited from Tesla's price hikes. Now, XPeng is cutting prices in China, but with less financial leeway than Tesla. Yeah, as I've said a million times, doesn't end well. XPeng reported gross profit of $4,565 in the third quarter. Doesn't sound too bad, except that's not what really counts. What really counts is the net profit. Oh wait, they didn't make a net profit. They made a net loss of a mere $11,735 per vehicle, according to company data analyzed by Reuters. And by the way, guys, this was the third quarter, 2022, before Tesla slashed prices and XPeng followed suit and slashed their own vehicle prices to compete. If you thought a net loss of $11,735 per vehicle was pretty brutal for XPeng, just you wait to see the impact of their recent price cuts. It's going to be a fucking bloodbath. Quote, we hope more people can access smart vehicles after we make our cars increasingly affordable, XPeng said in a statement. Vietnamese EV startup VinFast said Thursday it will use price promotions to fight back against Tesla. Yeah, this is a real problem. If you're an EV maker and you're not already making enormous profits per vehicle sold, just to refresh everyone's memory here, there's only one that's doing that. It's Tesla. Their net profit, almost $10,000 a vehicle. So if you're not already making stupid money per vehicle sold, and then you start attempting to compete with Tesla, they cut prices and still make insane money, and you cut prices and lose even more money, it really, really does not end well. I don't think people really understand this. Chinese EV maker BYD announced price increases effective January 1 after Beijing phased out EV subsidies. So far, BYD has not responded to Tesla's latest price cuts in China. However, BYD's gross margins of $5,456 per vehicle give it more headroom in a price war than VW, Toyota, or GM. It's amazing to see the mainstream media actually saying things about Tesla that make sense. Still today, many investors seem unable to wrap their heads around this very simple fact. Because Tesla is making so much more money per vehicle sold than any other automotive manufacturer on the planet, and most companies producing electric vehicles today are making $0. In fact, they're losing thousands of dollars per vehicle sold. And because Tesla continues to massively ramp up their production, 4 factories globally, there'll be more announced probably later this year, and is on track to reach around 20 million vehicles produced in 2030. Tesla is dictating terms for the rest of the industry. They have the technology and the pricing power. In order to sell electric vehicles, these companies will need to have comparable features and functionality, reasonable performance, that's not that far off a Tesla. And they'll also need to be sold around the same price point. Otherwise, consumers will literally need to be suffering from brain damage to buy an inferior, more expensive product. The problem is, in order for these companies to compete with Tesla on price, they need to lose stupid, financially suicidal amounts of money. It just won't end well. The pricing power Tesla has due to their insane profitability, even at today's relatively small scale. Remember, they're not even producing 2 million vehicles per year yet. Tesla is aiming to approximately 10x their production from current levels throughout the rest of this decade. And as they do that, they'll drive costs down, introduce new lower price vehicles, their margins will expand, software will become a much larger component as well. The question I want to leave you guys and girls with today, how the fuck is anyone going to survive the decade attempting to compete with Tesla producing electric vehicles? Explain in the comments how this will happen. I'm all ears, please. Let me know in the comments below, like seriously. How do these companies survive? Personally, I think the only real hope they have, leverage their existing brands, throw their hands in the air and go, f it, let's just license Tesla FSD, try to copy everything we possibly can, and we'll just manipulate dumb consumers into buying our vehicles even though they're not as good and they're a little bit more expensive just because of our brand. I think that's the best hope these companies have. And from losing insane amounts of money to making insane amounts of money, don't forget to check out today's exclusive Patreon video. A $50 million offer to a single content creator over 4 years. Just quietly, I think I'm doing it wrong. If you're not a member, you can join Patreon with the card in the corner or the link in the pinned comment. See you over there. Love ya.